This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hey guys, good morning from Money 2020. Live with Breaking Banks Europe. I'm Matteo Rizzi, the executive producer of the show, and I'm here. Good morning, Brad, with Brad Goodall, CEO of Banked. How are you, Brad?
Good, Matteo. Good morning. Good morning. It's been good to be here. Another day in Amsterdam, which is great.
Exactly. So let's start with the funny questions to wake everyone's up. Everyone seems to take out the name Bank from their logo and the name of the company. You kept it very proudly. What's the story?
I think so. We are obviously an open banking payments provider, and we really believe that trust is super important. And so what we want the customer to do is to trust their bank and the merchant or the person that they're paying. And so we sort of sit in the background. So Banked is about connecting to banks and supplying banks. But ultimately, banks feature very heavily in our world. And so we sort of embraced that. So it's not to start a bank at any point in time or anything like that. It's about trying to sort of power the bank ecosystem. And so we look, actually the term Banked was really about who you bank with, and today people bank, with lots of different places. It could be, you could have a crypto wallet that you bank with, you could have a neobank, you could have a traditional bank. We're very proud about the name for sure.
I get it. We'll actually dive a little bit more into Banked in a short while. But what I would love to do first is your personal background.
Sure.
But I know you're Australian.
Yes.
And we just discussed about, and everyone asks you, why did you move here? I am certain that you had a great reason. So my question would be, when are you coming back? But that's another topic, right?
Yeah.
Tell us about you.
So I'm from Australia. My career-wise, for the first
converted banker, right?
No, not at all. Actually, I spent all my time supplying to banks and building products for banks and selling to banks.
Then you're forgiven.
But I've never worked inside of a bank. No, I spent most of my career in core banking, and so I'm sort of new. Ish to the payment space. But originally from Australia, I came to the UK in 2014, and it was a combination of my wife's from Ireland, so we were sort of over this side of the world, but also the fintech industry was just booming at that point. And I came, and I was very lucky to join an ecosystem at the time, Level 39, and then I started working with Eric Vanderklay and some of the teams at Level 39.
We're going to have a little like a souvenir time. We were the first tenant with InnoTribe that I co-founded at Swift back in 2008 or 9 or 10. I mean, I don't know, but I visited Level 39 when they were still like a ruin.
Sure.
And Eric showed us this place, showed us a dream. And I said, listen, it would be great to have Swift as a tenant of this. So we went there. So we are both like a Level 39 adopted child or something, right?
Absolutely. It certainly gave me, I came not knowing anyone in London, and then knew so many amazing people inside of the fintech ecosystem, by joining that time, and I've got Level 39 to thank for that. And then I was involved in starting a company called 10x, and then started Banked, the UK for me, for the sort of second half of my career inside of fintech has been an amazing experience. I've been very lucky.
So as a fast learner instead of newbie, I'll use this word into the payment space. I am a newbie/current learner, in payments, because we actually have a show called Breaking Payments. So I'm learning a ton, with a bunch of partners. The genuine question I have is, when you read the mission of the top 10 new grown-up kids from the block in the payment space, they mostly have the same mission, right? So, and they mostly evolve in the same space. They are all very well funded, right? And you get a great first round as well. So why is that? I mean, is that the market is so huge? Is the thirst for innovation that is that big? I mean, because after a while I said, wow, I mean, this is another great, well-funded payments companies has arrived. They all seem to thrive. Why?
Yeah, I mean, I think it's a good example of, if you take Visa, it's probably arguably the world's best network effect business, and they started 50, 60 years ago. And by and large, they've been innovating over time, but, they're an incumbent. And they're a very big incumbent. And I think, the advent of the internet, obviously Stripe's mission of powering the commerce of the internet and increasing the GDP of the internet, that was about a distribution channel. And that distribution channel has gone huge over the last, sort of 10, 15 years. I think the space is big. I think the technology, by and large, is old, and so there's a disruption element there. And then I also think that there's a lot of things that aren't personal. So consumers are getting new personal experiences as a result of some of these companies that are looking to solve merchant problems and end consumer problems, as opposed to, I think, the inertia of a network that's just constantly churning out, and you can print cards, and then you can have issuing banks and acquiring banks, and I think now there's this new space that's sort of been opened up, and I think the space is growing. So I think there's a larger market share that's happening, but I think we're going into a very interesting market now, because to your point, there's been lots of very well funded businesses, but I think things like unit economics and distribution channels is really going to be challenged now, and you're going to have to really push to define. It's not just going to be about doing very big rounds and having lots of money and then working it out down the track. So yeah.
So what is Banked angle, or what is your mission?
So we really believe in the payment method that is pay by bank. So there's a pay by bank is called an alternative payments, and it's sort of alternative to card. And
you trademark it, right? Paid by bank or something? Is that,
not trademark. I mean, we own things like the URL, paybybank.com.
Exactly. Because I saw something on a website that they actually made the brand. It's not just it's just as a sentence, right? Yeah,
exactly. So we've branded Pay by Bank, and we want everyone to call it Pay by Bank. Like, that's helpful for consumers. We want consumers to see Pay by Bank and understand that that's an alternative way of making a payment to a card. And I think the job is really to actually make everyone alternative. So everyone's an alternative to card. Can we make card an alternative as well? I think is so. But our vision and mission is really about, can we bring Pay by Bank globally to the market, as opposed to what I think in the past you've seen alternative payment methods that have been local. So Ideal is a very good example of a great alternative payment method. Really developed well in the Netherlands, but it's considered a local payment method. And I think for the first time we're seeing digital banking apps, faster payment rails now start to come up in lots of different countries. And so there's this opportunity to bring all of that together and create a new payment method. And that's
as you know, guys, I'm based in Lisbon, and in Lisbon we have this great, let's call MBWay. And and when I arrived in Lisbon, it seems everyone, this country is completely, like, payments wise digitized, right?
Yeah.
But it's true that as soon as you get out of that tiny country, is useless. So it's like a global MBWay you're building, right?
Yeah, exactly. And I think merchants having a single entry point to being able to offer a product that is available in what's the version of Pay by Bank in Australia will be different to the version in the UK. That'll be different to the version in Lisbon. It'll be different to the version in the US. But somebody's going to go and take on the task of building those and working with the big providers that have got both opportunity and also the opportunity to lose. So if you look at the US, there's a real opportunity to disrupt the interchange space there. But at the same time, there's a real opportunity to put retail banks at the front and center of being in the moment of the payment and, capturing some value with the end consumer there. So I think it'll be different depending on the market. And some of it's about technical integration, but a lot of it, and certainly where Banked has got to focus, is what's that end consumer experience and how do you make that seamless for a merchant to plug into?
I was actually about to ask that. So if you said that You said that the experience or the way to experience that payment in Australia might be different than the way in Portugal or in Spain. What's going to be the experience of the client? I mean, which tools do I need to have if I want to bank with bank or pay with bank, pay by bank, sorry, in different countries?
Yeah, I think we are very partnership driven. So one of the things that we really believe in is making sure that the consumer can trust who they bank with today. So we don't want to create a banked brand that someone has to then relearn and understand and build trust with. What we want them to do is be seamlessly integrated and facilitated into their banking app. Or, there's a future world where there are, the MB ways of the world, even things like crypto wallets as people start to look forward. I know crypto's an interesting space at the moment, but as we start to think about
is a nice word to use.
As we think about that as just stored value, if someone's prepared to accept that stored value, and then there's a world where somebody wants to spend that stored value, then that's being able to facilitate that and provide it. So back to your question about what are you going to need? You're going to need to have an account, and a lot of the work that we do at the moment is really using your mobile phone to access that account. And the quickest use case at the moment is online, but there are lots of opportunities in physical as well to be able to bring it back there. But you need an account with somebody, and you need to probably access some type of mobile device.
So now I'm going to put my VC hat, which is also one of the, how to say it, one of my arch arrows, and so what's the traction so far? Typical VC question, right? But this is more of an interview one.
Sure. So we did a Series A with Bank of America, and we had Bank of America.
Super interesting that the bank, invested in you guys, I think.
Yeah, I think that's a good example of that's a commercial relationship and an investment relationship, and that's about identifying a very clear channel partner. And so Banked doesn't. We don't typically partner with a merchant. So we've got the merchant problems at the heart of our product. But what we want to do is work with channel partners, and we see banks as a really interesting channel partner. And so I think that judging pay by bank, judging open banking on payment flow, which is typically what VCs have done in the past. So when they've looked at card companies and card distributors, they're judging them on payment flow because they're judging, can you distribute, an already known payment method. This type of payment method isn't known to the consumer very well at the moment. There are some interesting use cases. There's a HMRC, use case in the UK. But by and large, going and buying a pair of shoes from Nike is not well known to the end consumer. And so at the moment, a lot of our traction from VCs is being judged around what we've built, the partnerships that we've built, the bank integrations, the direct bank integrations that we've built, the partners both on a distribution level, but also on a supply level. So, partners that we work with ourselves to bring the product to life. And so a lot of that is, recognizing that, yes, this is a payment method that is going to feature in the future. And then who's got the depth of product to both distribute it, but also to provide the most compelling, proposition. We did a deal with British Airways very, very early on around issuing points at checkout. And that was, again, about incentivizing a payment method so that, if I earn points with my card, why should I not be able to earn points with my, with a pay by bank payment? And so, again, that product partnership and that build is really where we're getting judged at the moment with, I think, quite forward-looking VCs that recognize there's a job to be done to build, and then we'll start to see the traction in traditional methods around payment flow and the like.
You said that you started online, so clearly your approach is global. But in terms of the physical points, I suppose that you have a phased approach, right? So which are the markets that you're going to attack first?
Yeah, there's some great markets around. One of the things that the pandemic did, very unhelpful in lots and lots of areas. But one of the things that it was helpful for was it brought the QR code to life all of a sudden, and people started getting
resuscitated, I guess.
Yeah, that's right. And so the ability to use QR codes in a world where you can check out faster. You don't have to wait for payment. There's some great, food delivery companies. There's some great pay-at-table businesses. And so I think that's going to be an interesting space. I think another one is refunds. So being able to take a product back to a store, a physical product, and have it refunded back via a pay-by-bank payment at point of sale, where you can then have the money in your account immediately and probably go back and buy goods from the same store, it's going to challenge the current method, which is, that'll be on your card, but it'll be there with you within 10 days. And so I think it's going to be those types of use cases that we're going to see first and foremost, which is really it's all great because it's showing the flow and it's getting consumers used to the flow, and then you've solved a pain point, which is I got my money faster so I could buy the new item of clothing or whatever, or I got to leave the restaurant faster. I didn't have to wait for someone to bring something to me.
So something that I want to catch your mind on is the fact that it really seems that this new payment grown-ups, because call them startups is not truth anymore, really seems to collaborate much more, in terms of hitting a niche problem, of the payment space, and then respect the fact that they can't cover it all,
Yeah.
And do you is that my impression, or you share that fact?
I think just in any technology play at the moment, you almost want to be the conductor of an orchestra if you can. You want to work with as many partners as you can and play a central role to those partnership strategies. And whether they're distribution partnerships or whether they're, you shouldn't want to be, if your job is to be a payments business, then KYC or fraud detection, there are some businesses that are amazing businesses that are focused on that. And so you should be able to build a product that you can partner with those, those companies seamlessly, and they can solve that problem, and then you can solve the problem of, ensuring that the payment happens safely and securely. So I think that, collaboration in the payment space is, it's such a big space, and it's a complex product. You're usually plugging into, legacy technology, and there's lots of different, steps that you have to get through, potentially regulatory steps that you have to get through. And so I think, your ability to partner well is almost half the battle. Building a great product, there's almost like three halves: building a great product, distributing that product, and partnering well. And I think you've got to try and make 150% equal 100% somehow.
After this one, what is the most interesting conversation that you had at Money 2020?
What a great question. I've had a few different conversations. I've had a lot of investor conversations.
That doesn't count.
That doesn't count.
Because that's selfish.
Yeah. Well, yeah, maybe.
I'm joking, of course. Investors have also a brain, not only a wallet.
Yeah. True. No, I think there was somebody that I met who's actually over from Australia, from National Australia Bank, and she's doing a bit of a tour at the moment. I think she's with Rise. Doing a thing, and she was telling me about some of the businesses that she's meeting, and just to see another Australian come over here all the way to Amsterdam, which is not something I ever did when I was working in Australia, and see amazing European companies and take that back to Australia. That's super interesting to me, because when I left 8 years ago, one of the reasons I left was because there wasn't a lot of VC money over there. I wasn't getting exposure in any way to Europe, and to know that that's happening back in my country now is like it's quite humbling, and it's exciting.
I think she was preparing the ground for you to come back, or pushing bank, to go to Australia soon, I think, right?
You never know.
Brad, we are wrapping up. Thank you so much. I think that was a great way to wake up, in this Wednesday at Money 2020. I hope our auditors wake up as well. This conversation will be recorded and, also on Breaking Banks Europe. Brad, thank you very much for being with us this morning.
Thanks a lot, Matteo. Great to be here. Cheers, mate.
And it's a wrap.
Hey guys, welcome back to Breaking Banks Europe at Money 2020, day 2. We are here with a co-founder and adopted co-founder at Griffin, and actually, good friend and former colleague at Swift, Adam and Alan. Welcome to Breaking Banks Europe.
Thank you. Nice to be here.
Alan, a couple of words about yourself, and of course, like the one-liner pitch on Griffin, then we take it from there.
Sure. So I'm a serial entrepreneur, founded Circle CI in 2011, which is now a Silicon Valley unicorn, and now we're building Griffin, which is an API-first UK bank. We're building a platform that fintechs can build on.
Cool. Adam, the path that I know, but that crowds doesn't maybe.
I'm Adam, Chief Commercial Officer at Griffin. Joined the business about a year and a half ago after the team had done a lot of the groundwork to become a bank. That's still a journey that we're on. Formerly co-founder of Form 3 and also worked at Swift for quite a long time. So really happy to be part of the team and working to make something unique in market. Great.
So Alan, let's start with the basic, okay? And it's a question that I already asked once, during another interview, but I love the fact that I get different answers, right? So there are a lot of I want to say grown-up kids from the block in this infrastructure as a service, space. They are all super well, funded. They are all getting traction. And I wonder whether or not it's because the need is so big and the potential market is so big, or because the need for innovation is so big and you guys are hitting a nail that is historically very weak in terms of automation and smoothness of building a service for a bank or for a financial institution. Or for a wannabe financial services company. Why is that? I mean, it seems like the crowd there, the market, the more companies that are coming.
Mm-hmm. Yeah. So I'd say on both points, both on innovation and on market demand, I'd say the answer is both. There's something like 600 million bank accounts in Europe and the UK, and they all want to move. All the consumers want to move digital. But the big banks right now are not really supporting that. On the innovation side, some of the hardest things to change in a bank are the risk and legal and compliance policies. So even if they want to change on a tech perspective, getting the rest of the bank on board is always going to be slow moving.
I get it. Adam, my friend Eugene Danielkis, the founder of Mambo, that is one of the guys that I missed back when I was an investor, ages ago. But I really like the guy. He's very affectionate to this world of composable banking. Okay, mm-hmm. He liked it, and I think that you guys are. I don't want to put startups in families, right? But it is true that you built an infrastructure that is really modular, and it helps someone who wants to build a service to just almost cherry pick from menu. This is what I understood from a very basic level. Am I right?
Yeah, to a certain extent. There's a number of core problems that we're looking to solve. So to your earlier point, there is a market need. Fintechs have to work with banks. That is regulated fintechs have to work with a bank. And they can decide to either work with a general purpose bank that happens to have a transaction service business and supports fintechs, or at least tries to. So work with a general purpose bank or work with a purpose-built bank. And we're a purpose-built bank specifically designed to support the ecosystem of fintechs and provide them with services and capabilities to allow them to build their businesses. And essentially that means that there are common problems that exist between all of these firms. From just being able to open a bank account and maintain a bank account, which is something that should be simple and isn't. Being able to manage risk, both in terms of customer onboarding, transaction screening and monitoring and fraud. These are common problems that are issues for our clients in the market that we're trying to serve, but they're also issues for the bank. So the approach that we want to take is we're co-investing in solving those problems, both for our own benefit, but also for our customers. The approach that we need to take is by nature modular, so that we can help customers that are on different points of their journey.
So is that correct that a tagline that I will sell you for free that could be adapted to Griffin is we became a bank so our customer don't have to?
I think so. I think
That's a great line, guys. Come on, it's
I mean, not
on the spot like this.
No, I mean, to be fair, not all fintechs want to be banks, right? Banks haven't got the best reputations. But I think it's worth revisiting that there are some banks that have gone through authorization in the last 10 years. If you ask them now, would you do it again? Would you become a bank again? And if not, who would you want to partner with? I think you'd get some really interesting answers. And hopefully part of the answer would be that the opportunity to work with a company like Griffin.
So, Alan, in my past as an investor, with the Omidyar network, I invested in Tandem Bank that now became, Harrods, I guess, or they took over the Harrods lines, but that's a detail. And, we're talking about close to 10 years ago, actually, 2014, 15. Where are you on the journey of becoming a bank, and how this, very important regulatory step has evolved in the past decade? I'm actually really curious.
Yeah. So we've submitted our application. So then if the regulators like it and everything goes well, we'll enter mobilization in probably Q4, Q1, and then go live in, call it summer 23. As far as we can tell, the process seems to have started taking longer. The earlier challengers seem to get through quicker, and it's, then we had Brexit and COVID, so that's kind of slowed things down. And I think the regulators have also gotten slightly more cautious.
Okay, and why is that? Or why do you think is that, of course?
My guess is, they saw some challengers get in easily and then have problems that they had to correct later. So then the regulators have been, raising the bar.
So, Adam, just to because again, we think that we talk amongst people who eat and bite, these topics every day. But, amongst our couple of millions of auditors, not all of them are experts, right? So, 1.9 to be precise. Wow. They might not all listen to this episode, but that's the number of downloads we have.
Right.
So, who are your typical customers?
Yeah, the customers that we're looking to work with once we become regulated are all fintechs who are regulated. So they will need to be, and in the UK, the banking license is initially for the UK until we expand into other markets. But clients would be servicing consumers, so the latest neobank or account service provider. They could be in a B2B space, wanting to provide better account services to corporates or SMEs. They might want to start with account services and then go into lending. And again, another reason that we're becoming a bank is so that we can offer credit back to our customers as well. Essentially, banks should be very efficient at managing capital and redeploying that back into the market. So that's the role that we want to play. In summary, all regulated fintechs in the UK, whether they're on the wealth side, consumer side, corporate side, to support all of them.
What about expansion to Europe, Alan?
As soon as we can. Mm-hmm.
So you need to ask for a license somewhere, on the other side of the, how do you say it?
Somewhere over here.
Yeah, exactly.
There are options. We don't have to go for a full bank license to begin with. So once you have the UK license, you can maybe partner with an EU bank or get an EU EMI, or there's a range of options there.
But you only need to get it in one country, right? Because then you can passport the license, or it's more complicated than that?
You can't passport. It's harder to passport now, but having a bank license in one first world country makes it easier to, the banks in the other country will take you more seriously than if you're like a startup. And so if we were an unregulated software company in the UK, EU banks would be like, why should we work with you? But if we're a full UK bank, they're like, oh, okay, you're a full member of the community now.
And I'm curious as well if, when the moment you sort of implement, your solution, how much of it is a business challenge and how much of it is a tech challenge? Because on the other side, right, there's something has to be plugged somewhere, right? So how did you go about it?
I mean, I'll go first if that's okay. I think.
Well, the CTO will have a say, I guess, as well.
No, I think what's really interesting is a critical part of the function of any bank, and ours as well, is how you manage and assess risk. And if you're limited by the information that you have visibility of from your customer base, that's really difficult. The customer onboarding experience that a fintech has with a bank today is pretty protracted and involves a lot of exchange of information about risk and compliance, the way that you assess risk, the control framework. It's quite a lengthy process. Can be 6 months, 9 months. It's quite typical. That's not ideal for a business to have to go through that. It takes time and effort. So we want to make that process as cost effective and efficient as we possibly can. Now, that isn't about making it easier to fill out a form. That's about changing the operating model between the bank and its customer. So part of our vision and part of our approach that we're now testing in market with some customers is to deploy a risk management platform that allows our customers to onboard their customers. It's something that we calibrate, so it uses technology, but it also uses the expertise of the bank to calibrate that for the risk of our customer. Yeah, does that make sense?
Yeah, it does.
So our expertise is something that we provide to our customer for them to onboard their customers. It then also gives us more visibility into the risk profile of our customer and allows us to serve them better. So I think it's a really good example to answer your question.
Yeah, I completely agree. At the end of the day, everything is both an operations problem and a tech problem. If we're trying to make products that are API first and digital first, you have to think a lot more about what are all the interactions that we allow. Because if you have a traditional bank account at a traditional branch, you say, "Oh, I've got a problem." You go to customer service. You're talking to a human. We still have customer service, but we would like to automate as much as we can. So then you have to think, okay, what are all of the reasons a customer would want help? And what happens when a company goes bankrupt? What happens when somebody dies? There are all these weird legal things that you don't often think about it from a product perspective, but we have to account for that in the technology. So what are the buttons somebody can press? That's both operations and technology.
That brings me to maybe the last question. So it looks like you guys are on the starting block, right? Waiting for the license to arrive, and then
we can see the finish line, but it's also the starting line.
Exactly. Exactly.
We've done lap one, the warm-up lap.
My very practical question is, what's in the kitchen right now? Whilst you're waiting for someone to allow you to serve the clients, to use the restaurant image.
Yeah.
Well, we have the identity product. We have paying customers for that now in early access. So some of the products we are planning to offer, we can offer without the license. That's mostly KYC, transaction screening, transaction monitoring, that kind of thing. And then we have the banking products. We'll have a sandbox, and then we're still just building. So there's a lot to build.
Yeah.
Both on technology and operations. We have to write banking policies and procedures.
Yeah, there's a ton of stuff to do, but I think one of the things that really interests me about Griffin and why I joined is this approach that we take to two things: design thinking and transparency. So it goes into everything that we do, and we try and expose that to our customers if they want to, if they're interested, like the approach that we've taken. And so the sandbox that we make available, it's not, if you want to look at it, if you want to play with it, anyone can do that today. There's no NDA to sign. You don't have to agree pricing. You don't have to go through contracting. It's a technology platform. If you want to spend some time looking at it, it's there, but it's there in its current form. And as Alan said, it will evolve as we build out the business. So we think we'd rather be transparent with people about what we really are doing for real, rather than a bunch of vaporware and slides and sales meetings. Yeah. And if that works and solves problems, fantastic. And if it doesn't, it's not spent, a lot of time figuring it out.
Of course. I love the fact that, this startup has been built by at least several former entrepreneurs, serial or not, it doesn't matter. But it really seems to me like you're really taking, the view of the customer, first and this journey. So. Good luck, guys, for now and the coming features. Thank you very much for being with us.
Thanks for having us.
Guys, That was Griffin, and it's a wrap.
Hey guys, we're back. We are back at Money 2020 live from the MoneyPot. This is Breaking Banks Europe. I am Matteo Rizzi, and I'm here with Joe Hurley from
Crown Agents Bank.
Crown Agents Bank. Not that they didn't know it. I want you to saying this name of the super historical institution I'm just learning about. And I think it has a fascinating story. Joe, welcome to the show.
Thank you, Matteo. Thank you for having me.
Let's start by your own personal background, which is already super interesting, please, and then a couple of words on Crown Agents Bank.
Sure. So I worked previously as head of business development for Discover Financial Services. So I ran a lot of the global business for Discover, and I worked there, again, 34 and a half years. So
1 year freshman in London, right?
And now I'm in London for 1 year. Yes, sir.
What a change.
It is a change, but a welcome change. I'm really enjoying it.
So, Crown Agents Bank, talk to us about it.
Crown Agents Bank. So, when I joined this bank a year ago, I'd never heard of it before.
Oh, okay. Now I'm relieved because I.
Yeah. So Crown Agents Bank is an amazing 188-year-old fintech. So
that's a good way of putting it.
Yes, it is. So we as a bank were owned by the UK government, and it was sold to be private about 7 years ago. Mm-hmm. And we're owned by Helios, which is a private equity firm out of London. And so the bank, pivoted into a new way of doing business. So we specialize as a bank in FX and payments. And so with that background of having previously been agents of the Crown Agents Bank, and they helped set up infrastructure in emerging and frontier markets. And so as we did that, we got to know those areas of the world very well.
That's why you were saying me that, Africa is one of your main markets, right?
It is. I think we are probably the best in the world at moving money into and out of Africa, and we feel really good about that.
So what are the challenges actually to, be in this space that seems like a gigantic space, but at the same time very niche, So what are the challenges?
Yeah, so I think you hit it. It may seem like a niche, but the market is huge. Africa is growing in ways that are, that is a new frontier. It's got amazing growth, and I think on the other side, for us as a marketplace, there's 54 countries in Africa, and we address by far the majority of the countries, and so when we think about it, just setting up and making sure we're doing all that we need to do to help move money into and out of those countries is tricky.
Like charity money, if nothing else, right? For example, which must be one of the biggest flow that goes into Africa, right?
Absolutely, charity money is really important. So we sort of break our business into a number of different segments. Some of the big four segments are charity money. We call it IDOs, or development organizations, or NGOs as yes. a common vernacular. So we work with a lot of the major providers and players in that space. We also bank 26 central banks, and that goes back to those earliest days. So we have good relationships with a lot of the central banks.
Most of these 26 central banks are in Africa as well?
They are. Most of them are. But again, their legacy from being part of the British government.
Yes.
So
yes.
Then the third segment that we participate in are major banks, tier 1 banks. A lot of banks, and an interesting thing about it, a lot of banks have de-risked Africa. They were there, they come back out, they may go back in, and then they come back out. So we just have had a really long-standing
deep relationship in the continent, and it's very helpful for us to be known that we're not going to abandon the market. So tier one banks, and then the last segment is fintechs, which is a natural for us.
So, and again, the reason why I'm like double clicking on this is because, you're a payments veteran, but not all our auditors are, right? So let me see if I understood correctly. So you're saying that very large banks are outsourcing to you guys the movement of large amount of money, with Forex, implying Forex to Africa, for example. They don't do it themselves. Am I understanding correctly?
Yeah. So perfectly well said. So those banks that aren't there, who need help to move money in or to take money out, they come to us and they ask us, could we help them with that task? And so we're really, really happy to pick up that business. There are a lot of banks that we haven't even called on yet because, again, our business model changed just a few years ago, and we had to make sure we had in place the proper infrastructure before we really started, pushing on and calling on a lot of the large banks in the world. But now we have, and we've got a number of them that are participating with us. Let's
talk a little bit about the fourth segment that you mentioned. So the fintechs. I suppose that you're dealing with large sort of grown-ups company, and I'm thinking now about the unicorn that recently surfaced the continent, right? And I call it the continent because you guys know that I'm particularly active in Africa, visit over 20 countries, which, for, a normal human being is already above the average for sure. And I'm passionate about, how this technology, can have an impact on the continent. So I suppose that you're here at Money 2020 to, sort of strengthening relationship with some of the existing clients. I mean, I saw some banks, but mainly to fish, pardon me the word, some new fintechs, right?
Absolutely. So Money 2020, by definition, it represents fintechs. It brings them all together in a way where you can have lots of collaboration and lots of discussion. And we provide services today to a lot of fintech companies. And the definition of fintech can be quite broad and quite unclear at times. But I would just say we do provide services to those fintechs, and we are here fishing. We are here, but we're also deepening relationships. This is the first time in a while where we've been able to get into this type of environment since COVID, and we're super excited to meet with all of our clients face to face and meet new prospects and share with them what Crown Agents does and how we do it.
Joe, I'm curious about the technological component, of the business, because for the people who are not dealing with it every day, a payments, even if it's like $500 million payments exchange in franc CFAs, it seems like a payments, right? But I'm pretty sure that we don't see the complexity behind it, right?
That's right. Well, we'd like to hide that complexity and make it easier for people. So I would say that, Crown Agents Bank spends a lot of money on technology, and that technology is meant to make it easier and more seamless for our clients. So by way of example, we have some very solid API infrastructure. So when we want to do payments and FX, we can do those through a single API connection, and really our view of it is to make it also very easy for a fintech who wants to write to us to be able to simply code to us, and they're up and running in no time. Again, the objective is to make us easy to work with, and that's something we pride ourselves in.
So one of the biggest challenges in Africa is interoperability, and interoperability between, not only different ecosystems, but also different regions. Like, when you, and this is like as less related, Crown Agents Bank is more your own experience, with the African market. Yeah. That, of course, has an impact on the payment space, right? So everyone focused on, the Kenya and Nigeria and Egypt, like the South Africa and the super well-populated and rapid growing countries, of Africa. Mm-hmm. But would you agree with me that, there is this Francophone and even like Lusophone part of Africa that is rapidly catching up? We're talking about roughly 500 million people, right? And the more we build rails in between the grown-up world within Africa and the catching-up world, the more the economy overall would improve. And I wonder whether or not you guys see yourself playing a role in this, because you're kind of the facilitator, right, of this economic exchange between different parts of Africa at the end, even if the bridge is outside of Africa. You see what I mean?
Yeah, I do. So maybe let me talk to that just for a couple of minutes. So, what you just described is what's going on in Africa. So one of the things that Crown is uniquely positioned to do, and we do it, we do crosses between different African currencies. And so rather than having to go from a currency up to the US dollar, back down to the other currency and the overhead associated with that, we do look at where we can do, and we do them. We do, cross-African crosses and into different currencies. Not every currency, but we're growing that type of activity. And I think that's going to be something that we're going to see a lot more of. And it makes for a lower cost transaction. And cost is a lot of the componentry. There's not, you want to have efficiency. You don't want to have waste. So we're super excited about, providing that type of functionality.
I actually think, generally, and this is not like me trying to, how do you say it, being clumsy about the question. Mm-hmm. I'm thinking of it at the same time. But today there is no player that is able to play this orchestrator role, in between different countries in Africa. And now I try to, I understand why, you guys have been privatized and someone sort of saw the opportunity, right? It must have been this way, right?
It very much was that way. Again, I think, we look at that market as being underserved by banks. Generally, and if we can fill the hole, it's important. If you think about our IDO flows, we're helping people to get food. We're helping to get, we're talking about the very basics of life, and that's very important to us. It makes our bank's charter in doing that type of monetary delivery, very important, but also very heartwarming. At the same time, on the commercial side, there's a lot of companies that are forming in these markets, and they're whether doing manufacturing or they're doing agriculture or and they have payrolls that need to be paid. Often they may be owned in by people in other countries that are paying into these markets. And at the same time, when they're selling their goods, there's got to be an exchange of monies. So our role in participating there, is a really important one, and that's how we feel.
If I put myself back my Swift hat of a few years ago, one of the largest challenges that this type of industry had was, in the trading space, the certainty that a payment was made in a given currency on one side. Yeah. And the other side had to release the merchandise or whatever was the deal, right? So I wonder, is this one of the potential value-added businesses that you can build on the top of your service, or is this something that you're already doing? That's again a genuine question. Yeah. That myself is asking. So. Yeah.
So when it comes to Swift delivery, there's still a dependency on the relationship with the banks who are participating. And I would say that our bank partners that we have across the continent value their relationship with us greatly. Why? Well, one, we bring a lot of US dollars to market, and hard currency is something that a lot of these banks really, really want. The second thing that I think about as it relates to these banks in these different markets is that they're looking for people who can deliver through the technology that they have, and so Swift is natural rails. We use those, and then we follow up and provide service, reporting, and making sure that everything is handled the right way. So if you're a bank or a fintech company using us for delivery, there's two things. One, you want a really good price, but number two, what you just hit on is they want to make sure there's certainty that the money's going to get there. So our strong relationships with those banks is what also helps us make sure that the money gets there.
Well, and I think that close to 2 centuries of business, as this company is, I think is also a good enough guarantee, right?
2 centuries of doing business and also the relationships with the central banks. We feel, again, I think we bring the full package, and that's and now we're really commercializing that and bringing on a lot more new clients, and we're looking at really solid growth right now inside the bank.
So Crown Agents Bank, I think, is an old lady that has all her space in an event like Money 2020. Thank you, Joe, for being with us today.
Well, thank you, Matteo. I really appreciate it.
And thank you guys for being with us. That's the Money 2020 pod, Breaking Banks Europe. And it's a wrap.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.